To assume or not to assume? That is the question. So, is there a right answer to whether you should or shouldn't? Pretty much like anything. Anyone who's watching my videos knows my answer is always it depends. It depends on who you are. So, assuming could make a good sense for you. The rates right now are higher than they were a couple years ago. When you look at assuming a loan, I am taking over the rate and payment and terms of the initial loan that was out there. So maybe you have a loan that's in the 2% range or 3% range that you can assume today at a much better payment. That's a pretty good thing. Something you want to keep an eye out for. I can only assume at the current balance though. So say I'm looking at a $500,000 purchase, but the person purchased it 3, 4 years ago for 350. The loan amount maybe they have in place is 300 on it. I can only assume at that level. So the difference between, in this example, the 300 to the 500, I would need to come up with. Normally, if you have that you're coming out of pocket, you were looking to make a large down payment anyway, not a big deal. If you were looking to make a lower down payment, you might need to look at putting a second mortgage in place. Second mortgages are not going to be at the same rate of first mortgages. It's going to be considerably higher, sometimes in that low teens kind of area. So does it make sense to assume a lower rate if your second rate is a little bit higher? Something you really want to talk to a trusted professional about. Another thing to keep an eye out for, the assumability on loans is really around government loans, FHA, VA loans. Questions come up, can a non-veteran assume a VA loan? The answer to that, yes. So you can. I am not a veteran. Thank you to all of our veterans that are out there. We appreciate, my family appreciates what you've done. So as a non-veteran, I can assume a VA loan if I meet the loan qualifications. Here's the thing you want to keep an eye out for, though, if you are a veteran. If a non-veteran assumes a veteran's loan, that veteran's entitlement does not free up. So if a veteran assumes a veteran's loan, the entitlement for that new veteran replaces the entitlement being used on the home. If a non-veteran assumes a veteran's loan, the current veteran's entitlement stays in place until that loan is paid off, i.e., refinanced or sold. So if that new veteran or the old veteran wants to go out and purchase a new house using his VA entitlement, it's going to be encumbered by the old house. And if that loan does not perform, there could be consequences as far as how the entitlement is viewed as performing that was used on the last home. So something to keep an eye out for. So does an assumption make sense? In some cases, it will. Things that you want to know, you're really looking at government properties. You're only assuming at the current balance of the loan. You're going to have to come up with the difference between whatever that loan is and what the current value of the house. And if a non-veteran is assuming a VA loan, it is going to continue to encumber their entitlement. Hope everybody's having a great day. Take care and good luck out there in the market.